Hey there traders, this is Chris Keene and this is the weekend wrap. It was a topsy-turvy day of trading where we had the twists and turns of presidential elections, we had the interest rate decision by the ECB and the BOE, and on top of that we had twists and turns from China and just general uncertainty about the economic stability of the central economies such as Greece and Germany and so forth in Europe. And this led to a lot of twists and turns in the market this week. It was really hard to get a grasp. I mean, basically, if you look at it from a standing out perspective, it basically the market just continued to slowly grind lower. But there was lots of false breaks to the top side, and then a lot of continuous consolidation in very, very narrow ranges. Let's take a look, though. Heading into the new week, we're going to have a moment of truth or a moment of thought right in the very beginning, because as you can see, we have the Euro USD just hovering around here at 127, or right below the 0.382 fib. We have the Great Britain pound sitting right at the 50 fib area around 159.03. We have the Aussie sitting right in its consolidation zone. The New Zealand is sitting towards the bottom, and the CAD is closing in right on the top of the 50 fib, and the yen is trying to sit at the bottom of the resistance zone. What we get from all of that is that all these pairs are sitting at significant resistance and support zones. So right at the beginning of the week, we're either going to get a bounce off these levels, or we're going to break through these support and resistance zones, and then we're going to have a more significant trend on our hands, which could actually be something that's a little bit tradable. So let's take a look at pair by pair. The first, the Euro USD. You can see the Euro USD consolidated in a narrow range with a 0.382 fib at 127.34, and the 127.50 area were acting as general support for about 2 days after the basically after the euphoria of the final outcome of the presidential election, just that there had been an outcome and we knew who was going to be the president. The pair moved up, and then we can see here that we all know that that didn't last very quickly, as the pair shot back down lower after comments from Draghi regarding that how the euro crisis was beginning to affect Germany, and then the pair just sat sideways and consolidated in this area, and then it looked like last night, after stronger than expected information came out of China, data points, that the pairs were getting ready to move higher. But then, as if on cue, the pairs shot back down and did break below the resistance zone. And now heading into the new week, if we stay below this 127.34 area, next level of resistance will likely this 126.02 to 50 fib, and then when we get down to 50 fib, well, that would be the moment we'll see if buyers come in or we get a push higher. So heading into the new week, that's what we're going to be watching right there. See if we get a bounce, and more than likely we'll get a bounce, and see if when we get up to here, what will happen if we get a knockdown or we get a push back up higher. And if we do get a push higher, automatically what comes right back into play is the 128.85 level, which acted, or basically the 128.85, 128.75, which acted as support, acted as resistance last week in trading. The next pair we're going to take a look at is the Great Britain USD cross. Because you can see this pair very similar to the euro. I mean, these charts, you can almost overhang them. We have the bounce here from the victory, the presidential outcome. Then we have the push down following the Draghi comments. Then we have strict consolidation. And then yesterday in trading, it started moving down until a little bit of data pushed the pair higher into the New York Open on Thursday, and then it looked like we had the false breakout last night, and then the consumer push down, and it looked where this pair stopped. It stopped right on the 50 fib at 159.03, and it did push back a little bit below it. But that's on Friday. We either have a lot of consolidation, or we have a push through levels, basically continuation Fridays, what a lot of people like to call it. And we got to push through levels, and we're more likely rebound off it. So we're watching Friday. Is we're going to see in the start of next week, we're going to see what the outcome of this is. If we get a bounce at this 159 level, which has acted as price resistance, or if we get a break below, we're on our way to the 0.618 fib at 158.80. If we get a bounce here, we could easily be on our way higher, and we could see a push up initially towards the old resistance at 158.60, and then 159.60, followed by the 160 level, and then hopefully we'll get a clear cut path through through that because I don't want to see that consolidation again. That's very aggravating trading to get stuck in a small narrow range like that in about 40 pips. All right, the next pair we're going to take a look at is the Aussie USD. The Aussie USD, you can see the pair have basically did the same, we all did the same thing, but then it consolidated right around the 50 fib from that move lower. 50 fib range in the 104.10 range. It broke above it and then it was consolidating around that level. It was holding it once again on the top side, but it did break below. But where did it stop? It was on like clockwork. It stopped at 103.60, which we can see was the ascending trend line that the pair had rode higher throughout this decline. This advance, which has lasted for about 1 month at this point. So now heading into the new week, it'll be all about what the pair does, and basically we're going to call this a wedge right here. Does between this level and this level, and we're going to probably bounce back and forth into these. I wouldn't even worry too much about this resistance zone that we had referred to earlier, because at least the top of it is we're going to take that off the chart. The top of it's kind of off the out of play right now. So what we have here is nope. Okay, so what we have here is, all right, what we have here is the pair just has broken the past resistance level, is acting as support at the 50 fib right now, and we'll see if we get the price action, and if we get a bounce or a break. We get a bounce here, we could easily be moving back up towards the 104.80, but if we do get a break here and we break below this ascending trend line, we could be on our way lower, and the first market would be 102.5. Oh. The New Zealand USD, very similar consolidation. The pair moved up, and then after disappointing data came out on Wednesday involving employment, the pair basically just moved down. And as I said this morning, we have resistance here at 81.50, and then we have support, and then we have more at 81.10. So this is basically the support zone. If we break this, we could be on a move lower towards 80, but I could expect buyers would come into this level, depending on the risk on atmosphere, and we could get a push higher, at least towards the 83 level sometime next week. The CAD, on the other hand, is just similar, sitting at parity, where the pair parity and trying to test the 50 fib also. The pair came within 10 pips of the 50 fib today before consolidating around parity. So what we're going to be watching into the beginning of the week is if we get a bounce at this level, what will happen. So basically you can see all the pairs are basically fighting the same beast, and we're going to get a break of these risk ranges, or we're going to get a bounce back from them, and we just got to figure out how we're going to play the cards in those at those particular levels. Now let's look at the Aussie, because the Aussie today looked like it was going to break out of the channel that we had discussed throughout the week. It looks like it made an attempt, but it moved all the way down towards the 79. But look, it rebounded quite sharply, and that is a very bearish, very bullish candle right there. And we could see a little bit of a move higher, and we're still going to play the same exact ranges. We have 79. Well, maybe we can move that to 79. Where basically we have this 79.45, 79.10 level is going to act as a strong resistance zone, and that the support zone in the top of the zone is in 80.60 and 81. We're going to watch the price action into those levels, and you need a clear break of those levels to get a little commitment to one side or the other. Let's take a look at some of the euro-yen pairs. You can see the euro-yen is very similar. It moved down to test the support and then bounced higher. And we can see if it breaks below this 101.50 level, we could see it push down lower, but it has layers of support now, right down there at 99.63 and so forth. There's not a clear-cut trade there, unless you just believe that the momentum is going to take it lower. If anything, we could look for a bounce and looking for a push towards the top side, with yen pairs depreciating against the majors over the next few days. The New Zealand, you can see it moved down and touched the 200-day moving average and found support at that level. And you can see that the 200-day moving average has acted as support roughly over the last few trading sessions. And we could run a trend line there, see if we get anything on that. Basically, we can do that. And you can see that the pair is looking to bounce at these levels. And I know these pairs will all be dictated more likely by the price action, though, in New Zealand and Aussie if they break above or below the current trend lines. The CAD is the most interesting of them all, because the CAD that's right here at significant support and resistance at 78.85. The pair has come down to test that level, and we're going to try to get a bounce or a break. bounce or a break right here at 78.85, and that's all we need to know. If we get a bounce to that level, we could be on our way back up towards the 50 fib at 79.67, back up to 89.2. Get a break, we could be down to 78.42. Let's just check the odds. Add JPY, not really any compelling price action there. You can see it had a hold at 82. So basically there's a range between 82 and 83.80, and that's what we'll be watching next week for a break or hold of those levels. And the Great Britain JPY, to finish things off, you can see just like the other majors, it found a bounce at the 200-day moving average and price support at 126.29. So if I was going to be watching the yen pairs next week, I'm going to be watching the Euro JPY at significant support and the CAD JPY moving right down here at 78.88. And then we have to watch once again the Euro pairs sitting right here at the 0.382 fib, the CAD sitting right here close to parity, the Aussie sitting right there at 103.8 trendline support, and the pound sitting at the 50 fib. It's going to be an interesting opening. We'll probably have a lot more clear-cut trading next week without the choppiness of the election results and uncertainty of clouding the two major economic areas of the world at one time. And we'll also have headlines from the economic physical cliffs in the USA that could add a little bit of fireworks. Over the weekend, I will add these charts to the blog, so we'll have a look at them heading into the week. Everybody have a great weekend, and remember to keep your trades keen and play it safe. If you want to sign up for a free 1-week trial of Keen FX, just click on the blog and it'll send you through the steps.